Hello everyone and welcome to my morning report analysis videos on Tuesday 13th of November with me, Richard, market analyst at Hantec Markets. We've got actually a fairly positive move on markets this morning despite the fact we had a huge sell-off on Wall Street overnight. We've seen, as I said, equity markets in the States were under real pressure yesterday, 2% down on the S&P 500, over 2% on the Dow, and there has been a mild recovery that we've seen of sorts today as futures have picked up. There were reports in China that talked about, I suppose, a thawing to an extent of the trade dispute tensions. So that's helped to improve risk appetite. You've seen the Aussie and the Kiwi dollars performing fairly well today. Also, we've seen just the rhetoric surrounding sort of moves towards a Brexit deal continuing to sort of heighten. Again, it's going to be dependent on not only whether they can get a deal past the European Union, that is phase one, I suppose, but then you've got to get a good enough deal that the UK Parliament as a whole is going to vote on. So that would be the issues there. But not only that, today we're focusing on the euro, which is going to be coming under scrutiny with regards to the Italian budget resubmission today, which is due to be put back to the European Commission. How the Italians can sort of tweak their budget in an attempt, I suppose, to try and placate the European Commission. Whether that actually is the case, and certainly the euro is going to be reactive to that. The dollar, look at that breakout on the dollar yesterday. Multi-month highs back towards levels not seen since June 2017 on the dollar index. That is a really strong breakout. And interesting that it didn't come with Treasury yields. Treasury yields actually fell. Treasury markets were closed yesterday for the public holiday, but the yields have been lower today. On both the 2-year and the 10-year, you can see that, although they are actually sort of way off the lows that they were earlier. It certainly is a suggestion that the dollar is basically strong due to exogenous factors, i.e. the euro and sterling weakness primarily. So that has been really key move there that we've seen on the dollar. As you can, that's a chart that shows you how weak the S&P 500 has been. But in terms of gold, back towards $1,200 now. $1,200 is psychological level, so watch out for that. But generally speaking, I think if you trade under 1,200, that is sort of confirmation of the bulls having just completely lost control and starting to sell down again back towards 1180, once more, potentially even 1160 area. So we've got some interesting moves that we are seeing on markets, but they are to a degree in wait and see mode, certainly considering the Italian budget and Brexit negotiations are ongoing. So data points today, we've got UK unemployment data, or more specifically, you've got the UK wage growth data, and that is at 9:30. Expected to see wages ticking higher to 3% actually. So that would be continuing the improvement in real wage growth there. Unemployment expected to stay at 4%. German ZEW economic sentiment expected to deteriorate to -25. Now that again is a continued deterioration in that number. Multi-year lows there on that ZEW economic sentiment, which again wouldn't bode especially well for the German economy. This afternoon, actually later this evening, we've got Japanese growth. GDP expected in Q3 to be -0.3%. So my chart today is Euro Aussie. What we've seen in Euro Aussie, is the fact that we've been tracking lower and we're now back towards a key pivot on the longer term chart, a key pivot around the sort of 156 area. This has been a key low on several occasions this year, and having broken down below, if you see a breakdown below that pivot, I think you're looking back towards the low 150s area. 152.75 was that June low. And you look at the strength of the selling pressure through momentum indicators, the RSI, 25, back in May, June. It got to below 20. MACD lines still accelerating lower, stochastics still negatively configured. It all suggests that this is a crossroads, I think, this 156 area, and obviously we've still got the downtrend in play over the last couple of weeks, still selling into strength on an intraday basis. You can see that through the hourly chart, where you see these old supports become new resistance areas. And look at those, the hourly RSI failing around 60 consistently, hourly MACD failing around neutral, all pretty standard bearish configuration on the hourly momentum. So it suggests selling into strength continues to be the way to play it. Now you probably need to see a move above 157 really, which is the trading over the last couple of 2 or 3 sessions, where the resistance has come in there and then market's fallen away. So you'd need to see a move above that level to really suggest the market is gaining some traction in a recovery. And even then, you've still got the overhead supply from the selling phase. So it's going to be a struggle, I think, to see a recovery in Euro Aussie. And for now, certainly, I think you're still playing this out as a negative configuration chart and selling into strength. So a close below 156 would really open the downside, I think, and you'd be looking at next support below that 154.25. So I wish you good luck in your trading today, and I'll speak to you later.